Welcome to a new video where we analyze the most impactful market movements with dynamic charts to make it easier to understand. Today, we will discuss a key event that hasn't happened since 2022. The Magnificent Seven have touched their 200-period moving average. Are we looking at a simple healthy correction or the beginning of a trend reversal? The dynamic chart you will see next is generated from the image on the screen and will allow us to clearly visualize how these tech giants have reached this crucial technical level. Before drawing any conclusions, let's put this into context. Understanding the importance of this event not only helps us analyze the current market situation but also allows us to project possible future scenarios and understand investor behavior in response to this key technical level. For those just starting in the world of investing, the 200-period moving average is a key indicator in technical analysis. It is used to measure the long-term trend of an asset. When the price of a stock or index stays above this average, it is often interpreted as a bullish signal, indicating strength in the trend. However, when the price touches or breaks it, it can be a warning that something is changing in the market. This indicator is widely used by analysts and fund managers because it helps eliminate short-term noise and focus on the overall trend. Historically, many stocks and markets have respected this moving average as a dynamic support in bullish cycles and as a key resistance in bearish markets. In this case, the fact that the Magnificent Seven are reaching this level for the first time since 2022 generates a lot of expectations in the market. Since 2022, the Magnificent Seven have maintained a clear upward trend. Companies like Apple, Microsoft, Nvidia, and Amazon have driven the market with impressive growth, largely thanks to the artificial intelligence revolution, the rise of digital commerce, and strong demand for technology. But now, seeing them touch this technical level, inevitable questions arise. Is this an opportunity or a warning sign? History tells us that this level has been key in the past and could define the market's direction in the coming months. To better understand this movement, let's look at the current market context. In recent months, we have seen a tightening of monetary policy, still high interest rates, and mixed signals in economic data. The Federal Reserve has maintained its cautious stance, while investors continue to assess whether the economy will achieve a soft landing or if we will face a more pronounced slowdown. At the corporate level, some of the Magnificent Seven have reported solid earnings but with signs of slowdown in certain business segments. For example, Apple has shown slower growth in iPhone sales, while Microsoft continues expanding its presence in artificial intelligence. Nvidia, one of the biggest winners of the last bull cycle, has seen increasing volatility, as its valuation remains a point of debate among analysts. This dynamic chart clearly shows us how each of these companies has reacted over time in relation to their 200-period moving average. The interesting thing is that in previous cycles, when these giants touched this level, the reactions were mixed. Sometimes they rebounded strongly, while in other cases, they entered prolonged periods of weakness. This reinforces the importance of analyzing the market from a broader perspective and not relying solely on a single technical factor. Now, the big question: is this movement a healthy correction or the beginning of a bearish trend? Historically, corrections are common in bull markets and can be an opportunity for long-term investors to enter at better valuations. However, when an index or a group of leading stocks break their 200-period moving average with significant volume, it can be a sign that the long-term trend is in danger. In 2022, when the Magnificent Seven fell below this level, the market faced one of the most challenging years in the last decade. However, on previous occasions, we have seen strong recoveries from this zone, driven by catalysts such as positive earnings reports or changes in monetary policy. That's why it is crucial to keep monitoring how these stocks react in the coming days and weeks to determine whether we are in a consolidation pattern or if there are reasons to be concerned. As this chart progresses, we can see the evolution of each of these companies and how they have interacted with this technical level in the past. History does not always repeat itself, but it often rhymes. And what we see here can give us clues about what might come next. Will the 2022 pattern repeat, or will we see different behavior this time? To get a better idea of where the market might go in the coming months, there are certain factors worth keeping a close eye on. Monetary policy. If the Federal Reserve starts to ease its stance, we could see a new boost in the tech sector. Corporate earnings. The upcoming earnings seasons will be key in determining whether current valuations remain justified. Capital flows. If institutional investors start reducing exposure to these companies, we could see more pressure on prices. Investor behavior. Market psychology plays a crucial role in these moments, and observing whether there is panic or confidence can give us clues about what will happen. Although the Magnificent Seven have reached demanding valuations in recent years, the recent declines have started to make them more attractive for long-term investors. During correction phases, markets tend to overreact, which can create opportunities for those looking to build positions in companies with solid fundamentals. Many of these companies continue to be leaders in their sectors and maintain significant competitive advantages. Microsoft continues to dominate the artificial intelligence and cloud space. Apple maintains a strong ecosystem, and Nvidia remains at the center of technological development. These strengths could be key to their long-term recovery. Additionally, in the past, similar movements in the 200-period moving average have served as accumulation zones for institutional investors. This suggests that, while declines may seem concerning, they can also represent an attractive entry point. The challenge is to differentiate a correction from a prolonged bearish trend. To do this, it is essential to evaluate corporate fundamentals and the macroeconomic data impacting the market. The fact that the Magnificent Seven are touching their 200-period moving average for the first time since 2022 is a relevant event and deserves our attention. It may be a sign of opportunity for some or a warning for others, but the important thing is to analyze it in context and understand what history tells us. If you want to see more analysis like this, I invite you to watch my latest video where I explain why Microsoft could represent a historic opportunity at its current valuations. See you in the next analysis.